There are only 9 trading days left in 2025, and this is actually one of the most important stretches of the entire year. Not because you need to rush into new trades, but because smart investors use this time strategically. This final phase of the year isn't about squeezing out a few extra dollars or trying to catch every short term move. It's about protecting what we have built, avoiding unnecessary risks, and preparing our portfolios for a strong start in 2026. So, in this video, I want to walk you through the mindset I follow every December, how I avoid emotional decisions, how I think about new trades, and how I use this period to set myself up for long term success. So, let's begin. The final days of the year have a way of triggering emotional decisions. It happens every December. Investors suddenly feel the pressure to catch up to the S&P 500 or Nasdaq, and traders jump into whatever is moving. Especially people start rotating between stocks simply because the year is ending. A lot of portfolios get hurt during this period, not because of bad strategy, but because of rushed decisions made at the wrong time. The reality is that you don't need to beat the market every single year. What matters far more is avoiding the big, unnecessary mistakes that set you back years. And historically, the last stretch of trading is exactly where many of those mistakes happen. Moreover, now is not the time to force trades. If a setup isn't clean, if the charts aren't confirming what you want to see, or if the valuation doesn't justify the risk, there's no reason to jump in. Sitting out is still a decision, and it's often the smarter one. The markets will still be here in January, in February, and all year long. But any money lost because of emotional trading in these final days may not come back easily. This is the moment to focus on quality entries, not the quantity of trades. And that brings us to the bigger picture, which is this is the time to prepare for 2026 and not to react to the tail end of 2025. A new year brings us new macro conditions, new institutional inflows, fresh earnings resets, and full sector rotations. Leadership changes, sentiment resets, and the stock that look strong in December are rarely the ones leading in the first half of the next year. So instead of chasing whatever is moving now, shift your mindset. Look for the stocks that are quietly building solid bases. Pay attention to ETFs that are slipping into long term buy zones. Watch for sectors that have been oversold and may be positioned for a comeback. And most importantly, think about which companies have real catalysts going into 2026. Adopting this forward looking approach puts you ahead of most retail investors who are still reacting to last minute moves rather than planning for the next cycle. Now, let's talk about something far more important than squeezing in a few extra trades, which is tax planning. If you are in the United States, these days of the year shouldn't be about trading harder, they should be about optimizing your taxes. And the most powerful tool you have right now is tax loss harvesting. It's one of the smartest financial moves you can make before the calendar resets. Here's how it works. If you are holding positions that are currently at a loss, you can sell them before December 31st and lock in that loss. That realized loss can then be offset with capital gains from your winning trades this year. It can also help reduce your taxable income and ultimately lower your tax bill. It's one of the few legal cheat codes built into the tax system. The best part is that you don't have to lose your market exposure. You can buy back a similar stock or ETF right away, but the only thing you need to avoid is the wash sale rule, which means you shouldn't buy the exact same security for 30 days. Depending on your gains this year, this move alone can save you hundreds or even thousands of dollars. This is also a great moment to trim any positions that have grown too large in your portfolio and rebalance back to something comfortable. And if you have made profits from short term swing trades, consider shifting some of that into your long term conviction names where the real compounding happens. And now, as we enter the final stretch of the year, protecting your mental game becomes more important than ever. The last trading days of December are full of noise. You'll hear about Santa rallies, you'll see other people posting their gains, social media will hype every move, and there's always pressure to finish the year strong. But the truth is, we don't need to be a hero right now. We just need to stay disciplined. And our goal is to enter 2026 with a clean portfolio, cash ready for opportunities, conviction in the positions we hold, and zero leftover emotional trades. This is the kind of preparation that sets you up for success long after everyone else burns out chasing the last few points of performance. So, here's the mindset to carry with you as we wrap up the year. Don't overtrade, don't chase, and don't try to beat the market in the final minutes of the game. Focus on protecting your gains, optimizing your taxes, and positioning intelligently for 2026. This is how long term investors stay consistent year after year, not by making heroic decisions, but by avoiding unnecessary mistakes during the most emotional moments of the market. And if you have watched this far, I truly hope you found some value in this video. If you did, a like would mean a lot, and consider subscribing to the channel so you can follow along with my investing journey and future updates. Until then, stay patient, stay disciplined, and wait for the right opportunities. Thanks for watching, and I'll see you in the next one.